to get people investing, building, buying, manufacturing, all the above in the United States. And so one way to do that is to say, hey, if you're a crypto investor, buy some tokens that are based out of the United States. And when you go to sell it, after 12 months, by the way, capital gain is after a 12-month hold. So you traders don't get, gleamy-eyed here. But after I hold this token for at least 12 months, I might get a reduced capital gains rate. And that's going to help. And why would he do that? Because it stimulates the economy in the United States. It creates jobs in the United States. What extent? But that's the theory. And I think in a perfect world, it'd be exciting. I just hope that the tokens I like are, going to be here in the US.
Yeah.
Always number one, my investors out there, you invest in what you know is best. Who cares if I can save between 15 to 20% on the tax bill, tax rate? I want to buy what makes freaking sense. Then it happens to align with a US-based opportunity, great. But let's not chase that. Let's chase what we know and is going to make us money, and then hopefully they coincide.
Yeah. Well, I think that's the point, is you look at some of the projects that we talk about here on the show quite a bit. Most of them are, well, quite a few of them are based here in the US, even though it seems as though there's a lot of the blockchain companies now vying for the idea to make sure that Trump and the administration knows they're a US-based company. Ripple, you got guys over at XRP, obviously, and then places, projects like Solana, Avalanche, et cetera, that have kind of gone. Hedera is another one.
Good morning, everyone. Hello, and welcome back to another episode of your favorite crypto news related channel. And today is going to be a very exciting episode, as we're going to talk about some speculative topics. Now, of course, I started off with this video discussing how there could be a tax reduction inside the United States for US-based digital assets. And this is something that we've been speculating on here for a really, really long time. And the reason is we have seen Eric Trump, son of Donald Trump, come out and be very outspoken about this issue, that he believes many of these digital assets are not securities. They're more like a currency. And how can you take capital gains tax on a currency? Simply does not make sense. So there's a very logical reason, but I love what Mark Kohler had to say in this very brief clip. If you want America to be the crypto capital of the world, we need to incentivize people outside of the country to invest in American-made projects so we can have the largest and strongest digital economy that exists on planet Earth. Now, during today's episode, we're going to be breaking down the United States plan to save digital assets. I've got some really cool updates in regards to Larry Fink. We're going to draw a correlation between the 2017 bull market and what we are going through today for the XRP community. This is a correlation I want everybody to be aware of. Even back in 2017, the liquidity wick that we saw over the weekend, this coincides perfectly with the 2017 bull market for XRP, where we saw this asset go from a fraction of a penny to north of $4. Now, where are we in that current bull run? I'm going to be showing you guys that later on in the episode, kind of highlighting some of the indicators in the chart. But what I believe we're on the precipice of here, the Fed reducing rates, ETFs being approved, Clarity Act gets passed, and euphoria enters the crypto space, where many of our favorite projects like an XRP, they're not only trading at new all-time highs, they are trading at many of the very high price targets that our Good Evening Crypto live chat has been predicting. So I want to give a massive thank you guys, and a reminder, during today's episode, we are going to be addressing every single donation at the end of the show. We do 30 to 45 minutes of open dialogue. Then we get into the questions and comments from the donation. So I want to give a massive thank you, Miss Daisy, with the $9.99, a great way to start off today's episode, guys. And we already have over 1,200 live listeners here joining us. If you're excited and you enjoy this content, show us some love, smash that like button. And one thing that we're going to continue to do for you guys, we are going to show up every day, twice a day here on the Good Evening Crypto channel. But this is an update I just saw this morning. Ripple CEO Brad Garlinghouse was talking policy, innovation, and the future of global finance at the DC FinTech Conference. That's a brand new update that we just got this morning. But in regards to the XRP price chart, like I've stated, back in 2017, we had a massive liquidity wick that impacted the entire crypto market. Now, XRP was hit massively. We saw this project all the way back in 2017 have about a 45, 50% depreciation in a single week, very similar to what we saw on Saturday. But that's not where it gets exciting. The correlation gets exciting when you think about, show me the chart and I'll tell you the news. And we know all the positive catalysts that are on the horizon. let's discuss the positivity in the XRP price chart as well.
We're taking a look at XRP. Amazing flush on the crypto crash on XRP. Look at where it went down to, guys. I mean, if I had been quick enough, I would have been buying like crazy here. I mean, this is such a great technical support. Look at how you had all these dips into this level over and over and over again, and then it rallied up. And then on the crypto crash, where did it go? Right there. And look at the bounce. I mean, just an incredible, incredible bounce. Now, what you're watching for is you've broken below. See, this was a wedge pattern. We broke down, and look at what happened, by the way. We were just talking about how when you break outside of a range, you get a massive move in that direction. Well, this is exactly what we're talking about, right? Here you broke below, and look at the flush. Now, granted, it was the crypto crash there from Friday, but still, it shows you how big the drops can be when you break these major levels. The point being is we've rallied back. This becomes resistance with this. Now, this level here becomes resistance. So anywhere between 273, we're taking a look at XRP. Amazing flush on the crypto crash.
There you have it, guys. That 273 range to 291, that's where the Good Evening Crypto community should be watching over these next couple of weeks. For the time being, trading under $2.50, we're just in a trading range. We're trading between 225 and about 270 right now. My anticipation is that we are going to see a breakout, but it will be dictated by the momentum of Bitcoin. And with that being said, I wanted to give our listeners an update on the M2 money supply and how this has been skyrocketing over the last couple of months. The correlation between the M2 money supply and Bitcoin, it's very relevant because as you guys can tell here, every time we print new money, the Bitcoin chart, it's a laggard. It quickly follows the price action of the M2 money supply. And most people watch the charts, but the smart money is watching the M2. The M2 is the global money supply, and Bitcoin follows this like a shadow. When M2 goes up, crypto pumps, and when it drops, the market bleeds. And right now, this chart is saying we are about to rocket to the moon. I'd love to hear if our listeners believe that, guys. So a lot of other channels, they're not as optimistic as you would think. You come here on Good Evening Crypto, and we're going to continue to stick by what we've been predicting for a really long time, which is that we're going to get an alt season here in 2025, and it will be dictated by the price action for Bitcoin. And this price chart that we're showing right now, it is an obvious correlation between the M2 money supply that is pumped into the open markets and what we witness with Bitcoin every single bull run. Now, this is a piece of data all new investors should be aware of. Historically, October is the most bullish month for all digital assets. 10 of the last 12 years, we have had a green month in October with an average return of about 22% on the Bitcoin price chart. It's still just October 15th. And if I've learned anything about the digital asset space, it takes a single headline, a single narrative to completely flip the momentum of the market and drive many of our favorite assets higher in price. And that's what I'm anticipating here in 2025. The second that we see Bitcoin begin to get daily closures above $120,000, get ready for these altcoins to explode. And although we saw the major collapse less than 6 days ago today, where many of our favorite assets depreciated 50, 60, some even 80% in price, the rebound has also been historic. Even this morning, Bitcoin trading at 111,000, Ethereum is 4,000 flat, BNB token maintaining that fourth spot above XRP, trading at around $1,200, and XRP currently trading at about $2.46 this morning. So we really need to keep an eye on a daily closure. And if we can get a daily closure for XRP above 290, I would anticipate bullish momentum is back, that relative bottom is in, and we can start getting excited. But as you guys are going to see later on in this episode, and maybe I'll just dive into this analysis right now, back during the 2017 bull market for XRP, we actually traded slightly down for a couple of weeks after that major correction. So we had this huge liquidity moment that occurred in the crypto market. We saw assets like XRP depreciate massively. We then went on to rebound, trade down and sideways, and then went on our historic bull market. So we could see a price chart for XRP that's trading around, $2.20, $2.05. Bottom is in, and then we rocket off to the races for the XRP community, like many of our listeners believe in, guys. And I'd love to hear ones in the chat if you believe October clears this month in the green. Twos in chat if you think that simply does not happen here. There's too much bearish momentum. But I wanted to dive into this 2017 analysis because I find it so relevant to what I'm seeing in the crypto market here in 2025. So this user commented, XRP is going through the same scenario with a brand new cycle. The XRP cyclical structure is showing striking similarity once again. After the major rally in 2017, the price was rejected at the 2013 all-time high level. It then went on to retest the 2014 all-time high level, which had previously acted as resistance. After accumulating strength in this area, it began its parabolic run where we saw, guys, this went from 3 cents to nearly $4 in only 180 trading days. That is ridiculous momentum. If we even get half that, many of our listeners are going to be dealing with generational wealth. Well, after the strong surge in 2024, the price was rejected at the 2017 all-time high level. It then went on to retest the 2021 all-time high of $1.90. And now the power accumulation phase is ongoing in this region. Following this consolidation, the next parabolic run will be inevitable. Patience is the most valuable strategy when it comes to operating in the crypto space. So time and time again, we've told our listeners this narrative because I believe this is going to give our community an advantage during this bull market. Do not fall for the retail investors that are telling you it's over. Many of the indicators from both a technical analysis standpoint and from a show me the chart, I'll tell you the news perspective, it looks like this market is about to get explosive. And I wanted to just highlight this data once again, because look at where we would be. If this is the 2017 cycle, guys, all of the excitement, all of the bullish momentum, it's in front of us. We are just at the beginning of this entire liquidity wave. And think about the thesis that I've been telling you guys for a really long time, that a $3 XRP is massively undervalued here in 2025. This is an asset that traded as high as $3 all the way back during the 2017 bull market, back in 2018. 8 years worth of developments have occurred since then. Back in the day, 2018, Ripple was strictly an on-demand liquidity company. Now it's tokenization, it's smart contracts, and it's the future being developed with blockchain products. Back in the day, that was a conspiracy. Now it is an absolute fact here in 2025. We do have 2,000 live listeners, guys. If you enjoy this content, show us some love. Smash that like button and keep showing up to Good Evening Crypto as we're going to give you the morning updates. Then we're going to show up for the 5:30 p.m. updates. You're not going to find anything like it. We are the most committed team in all of crypto, and we already passed 250 likes. So shout out to the best community in all of crypto. Now, on a stronger note, on a more bullish note, as you guys can see, if we saw a breakout for the XRP price chart that was even similar to 2017, we're going to be looking at a price target way beyond that $8 to $12 range that I've been talking about. If we just get this first breakout, this first correlation here that occurred back in 2000, I think it was late 2017. This euphoric moment was early 2018. If we even see this type of momentum, we're going to be looking at a $17 to $24 XRP. I'll say that again. If we get the same bullish wave, just the first part, not the second part, we are looking at a $20 XRP here in the next few months. Now, I'm not leaning in that direction entirely yet. I got to see how these catalysts play out. We have to watch the government come back. Right now, these ETFs are on pause. I don't think we're going to get any type of ETF approval here until the government is back in their offices doing the job that they're paid to do. But for the short term, our listeners may have a great opportunity to buy these assets at low prices. Because again, once we broke out from these ranges, we never came back to those prices ever again. Not even in a bear market did we see a 3-cent XRP for anybody in our live chat. So shout out to you guys. This could be the opportunity, the calm before the storm. And as this market continues to evolve, it is American-made digital assets that will have an advantage. A lot of these narratives, my personal perspective here, they've been put on ice. A lot of people aren't even talking about what I believe will be most important towards the back end of this year, which is when the Clarity Act is passed and when these ETFs are approved, Wall Street companies will become the biggest advocates for crypto technology. And that's going to benefit all of us retail investors who beat Wall Street to this game. So shout out to you guys for being the early investors that we talk about. Now I'm going to give you a little update here from Larry Fink. This is BlackRock CEO on CNBC just yesterday talking about we are at the beginning of real world asset tokenization. Every single stock, every bond, every ownership right will eventually be tokenized and on a public ledger. And it looks like BlackRock is going to be leading this narrative. So first of all, I'm going to show you this video from Larry Fink. Then we're going to get into the real end game here when it comes to tokenized assets, because they wouldn't be using this technology if it didn't benefit them from a control and business perspective. Here's BlackRock CEO Larry Fink.
I do believe we're just at the beginning of the tokenization of all assets, from real estate to equities to bonds across the board. There's $4.1 trillion of money sitting globally in digital wallets. A lot of that money is outside the United States. If we could tokenize a ETF, digitize that ETF, we can have investors who are just beginning to, invest in markets through, let's say, crypto. They're investing in it, but now we can get them into the more traditional long-term retirement products. So we look at that as the next wave of opportunity for BlackRock over the next tens of years, as we start focusing, moving away from traditional financial assets by repotting them in a digital manner, and then having people stay in that digital ecosystem. I do believe we're just at the beginning of the tokenization of all assets from real estate.
So think about this, guys, because I wanted to play that first line twice for our listeners. I began showing you this narrative all the way back in 2024. I think it was when Larry Fink initially made these bullish statements. It was the summer of 2024 where he said every stock, every bond will be tokenized on a public ledger. Voting is going to take place on a ledger. Everything is going digital. And yesterday, we got an update from the IMF where they said every single asset, including fiat currency, is going into a digital landscape. Now, you got the pessimists out there who are like, well, why are they doing this? This is the beast system. This is the digital ID. There is that bad side of this whole narrative. There is the opposite end of this where many of the people who probably haven't shown that they have our best interest in mind, that's probably the most polite way I could put it, those people are going to be getting more control with a digital ID, with a central bank digital currency. And that's why we always advocate against these things. But I wanted to play this very short clip talking about what BlackRock's end game is here. And I'm forgetting this woman's name. She's super smart. She's gone viral several times for her insight on BlackRock's technology and where this whole business model is headed. Think about companies like Ripple. They're working with BlackRock. Companies like Ondo, they are working with BlackRock. BlackRock is going to be all over the crypto space. We may even see BlackRock become the largest custodian of digital assets, not just in America, but globally. They've already accumulated $100 billion worth of Bitcoin in just 12 and a half months, or it's been 20 months. In 20 months, BlackRock has accumulated $100 billion worth of Bitcoin. Wait until they have these altcoin products. You're going to see them custodying 20 billion in Ethereum, 25 billion in XRP, 10 billion in Cardano. You're going to see these altcoins be custodied all across America in the largest asset managers on the planet. So we're all here before that moment, guys. And I want you to keep that in mind. One side of this is, yes, they're trying to infringe. They're trying to get more control. They're trying to centralize many of the things that are decentralized. But the positive end of that is that our community, specifically the 2,500 people who are here watching this episode, you have the insight and the foresight as to what's coming, and you're going to be able to profit off this evolution in technology since we can't prevent digital systems from emerging. But let's listen to this short clip and break it down. Here it is.
Larry Fink is now running, I believe, the World Economic Forum. He's acting chairman. And in addition to saying that everything, will be tokenized, he's said that everything will soon be on the same universal digital ledger or database, and that everything on that database will have a unique identifier number. So for you as an individual, your identifier number will presumably be your digital ID or directly linked to that. But everything will have a digital ID. The tokenization agenda in particular seeks to tokenize not just assets that we traditionally think of, like real estate, for example, or gold, or physical assets, as well as digital assets like Bitcoin. There's a major effort connected with people like Fink, and also people like Mark Carney, who's now Prime Minister of Canada, to tokenize the natural world and transform it into financial assets. And there was an attempt to do this to an extent under the Biden administration, I believe through the Department of Interior, with natural asset corporations, but that has not gone away. And there are groups, for example, one of the creators of the ETF model originally, which BlackRock now owns, iShares. His name is Peter Knez, I think is how you pronounce it. He's trying to turn the Amazon rainforest into a digital commodity, sort of similar to Bitcoin in terms of like the scarcity idea that each hectare of the Amazon rainforest would represent a token, and then financialize it that way. And then each hectare would then have its unique identifier, right, on the blockchain. and would be, serviced by surveillance drones and all sorts of stuff. So even our most like natural, the places we conceptualize as the most natural places on earth, these people want to come in, place surveillance technology and, tokenize it and put it on a blockchain and use it to, I would argue in the case particularly of natural asset corporations and the group behind it, the Intrinsic Exchange Group, they just want to open up a huge new asset class. They call it nature's opportunity, so that they can continue engaging in the same type of bad behavior that, for example, brought us the 2008 financial crisis. By quintupling basically the amount of assets currently in play. It's
I had a guy
very insane.
I had a guy who worked very, very, very high up at Citibank, and he told me around 2008. He said, "Glenn, don't worry about the financial system." And I'm like, And he said, we're never going to go broke. I mean, do you know how much just the national parks are worth? And I looked at him and said, "Are you seriously telling me that we should commoditize the national parks?" And he said, "It's going to happen." And I wonder now if this is what he was talking about, if it was just a digital, not actually selling them, it's just a digital commoditization of our parks.
Yeah. So apply this now to the phrase that we all heard during the COVID era, "You'll own nothing and be happy." Well,
yes.
There's certain people that want to own everything, and that includes things that have never been able to be owned before, that were considered things like the public commons, like rivers, lakes, the ocean itself, natural forests, all sorts of it. These people want to put all of that into the financial system, fractionalize it, tokenize it, and sell pieces of it around. Use it to speculate on. I mean, it's very
insane.
bonkers.
So guys, there's this. First of all, this is a narrative that we can't prevent, because a lot of people here in our live chat are like, "Why would we participate in this system?" It's not that we're advocating for this. It's not that we'd like to participate in this. It's that this has been in the works since the early 2000s. And you heard Glenn Beck say this back during the 2008 financial crisis. A financial advisor at Citibank, which ironically debanked Brad Garlinghouse during the Biden administration for being the CEO of a crypto company. Well, all the way back in 2008, Glenn Beck is stating that Citibank was already focused on the tokenization of assets, right? Maybe they didn't say the quiet part out loud, that all of this will be centralized and controlled by the largest institutions on the planet. But the reality is that these ideas have been in culmination since the early 2000s. And so when you think about Bitcoin's inception back in 2009, and the fact that if you Google Satoshi Nakamoto, that takes you to central intelligence, all these different narratives, there has been a obvious problem with the fiat system since the late 90s. I think maybe America even peaked economically in the 1980s, in the 1990s. Some of the people who were alive and thriving during that era, please validate what I'm saying. But your dollar used to go so much further, and people started to realize that the dollar was rapidly depreciating in the early 2000s, right? They passed the Patriot Act. They infringe on the dollar. Inflation becomes the new standard, where we're dealing with 4%, 5%, 6% inflation across the board. Yet the Fed is telling us that's only about 2%. And then the COVID era hits. And when COVID hit, we saw the printing press be turned on and ramped up in a way we've never seen before. Stimulus checks, $1,400 given to every single American. It all went to the Gucci store. It all went to the Amazon shops. Where did that money go? It was funneled from the lower class up the power pyramid. Where do people spend their money? The majority of money spent in the United States, it's Amazon, it's Walmart, it's Target, it's Apple. It's the places that all of us shop, right? I'm sitting here doing this show on an Apple device. I've got an Apple laptop. I've got an Apple cell phone. And that's just the truth of the matter. When you give the lower class money, if there's not small businesses for that money to funnel into, then it just gets sent right back up the power pyramid and into the hands of people like Jeff Bezos or Tim Cook at Apple. So all of these narratives kind of play together. And why am I even explaining the whole rapid inflation issue is because they're going to expand the United States economy by taking private ownership rights and allowing you to tokenize that and offer it on a public ledger. That would mean if I own a home, it's worth $500,000. I want to raffle off, a part of that home. I can now do that on a public ledger. And all of a sudden, I'm not really a homeowner anymore. I don't have full control over my own household. And so although these narratives may sound exciting to the uninformed, I can now get access to new liquidity. I can do more with some of the assets I own. What they're actually doing is removing ownership rights, which is the most important thing in America, guys. Private property, private ownership. That's what this country is really founded on in a lot of ways. Of course, liberty, pursuit of happiness, all those great things in the Declaration of Independence. But at the end of the day, the US dollar and private ownership rights, that's the foundation of America. That's what gives us the incentive to work hard, go out, earn our income, and buy into this system. Well, let me just say it out loud. As a young person today, I talk to tons of people every single day about these exact topics. Young people are not buying into the system that if they go to college and they get a decent job, they're going to be financially free. They're going to have a home. They're going to be able to start a family. That to me is a major issue. And I think that people have been focused on this issue for a long time, and they're going to use tokenized assets, digital IDs, things of that nature to expand the American economy, make a very small percentage of us rich, probably the people who are watching this show today, while taking away private ownership and reducing the power of the sovereign citizen here inside the United States. But guys, we got 3,200 live listeners here. If you enjoy this content, show us some love. Smash that like button. I'm not sure what the live likes are at. I'm going to go and check that right now for the live chat, guys. We are already at 383 likes during this program. If you're excited, you want to help out the show, smash that like button. It greatly helps us out. Now, I did want to play this longer clip here. This is Brad Garlinghouse just this morning talking about policy, innovation, and the future of global finance at the DC FinTech Conference at 2025. This is so important because he addresses regulation, some of the major changes that we've witnessed, and also it's the first time we've heard Brad Garlinghouse in a few months. So I'm really excited to hear some of his opinions, guys. We're going to play this long form clip together, kind of break it down as a unit here. But I want to give a massive thank you and shout out to all the people who show up every day. We got a few donations that came in. I want to give a huge thank you and shout out to those people as well. Here's Brad Garlinghouse speaking just this morning at DC FinTech Week, describing everything that's changed in the USA.
I'm very excited for this conversation. Brad Garlinghouse, CEO of Ripple, an absolute powerhouse, I think, both in the digital asset space and now in the Washington, D.C. space as well.
A lot has changed. 1 year ago, I was on this stage and I was thinking about how much has changed even in that year. It's profound.
That's what happens when a new administration comes into town, particularly one that had such a stark difference in crypto. I do want to start, though, as a Capitol Hill reporter, back a little bit with market structure. Obviously, you were listening with the last panel and kind of their assessment on things. Kind of sounds like this might be able to get done, perhaps not this year. But I'm kind of curious what you've been hearing, because Ripple, again, has become such a major player, I think, in politics on the Hill. What is your read of the tea leaves?
Well, I think one of the outcomes of having been the tip of the spear in the Biden administration's attack on crypto through the SEC is it kind of elevated Ripple's position. Even a year ago, sitting on this different building but stage, the SEC at that time was appealing the loss, and we were kind of continuing down this journey of the attack on crypto, and so. We and many others in the industry always got more active in Washington, and it's I think profound to have such a pro-crypto Congress. The Clarity Act passed the House with 78 Dems coming over to support a Republican bill, which I think is indicative of the desire for these technologies to be embraced. Ripple certainly will continue to be active. I don't know how to handicap the Senate. What's going on in the Senate with the Clarity Act, their version of the Clarity Act on the Senate side. I've listened to some of the earlier panels with interest on that. It's always hard to know, particularly during a government shutdown, how that's going to play out. But look, I remain optimistic. The industry needs what Ripple has already achieved, which is clarity. And we had to get clarity through a $150 million lawsuit and a federal judge. But we think the whole industry should have that same clarity. And so we've been fighting for that, and we'll continue to do so.
Mm-hmm. Do you think
Guys, I just want to make a brief comment. First of all, look at the sponsors for the event. You have Amazon Web Services, you have Visa, huge on the screen. But then you look at the platinum sponsors on the right side of the screen. It's Robinhood, it's Ripple, it's Ondo, it's Citibank, it's Circle, it's Chainlink, and a couple of other companies there. But that's so important, guys, because I always talk about, and I just realized I'm blocking it on the screen, so I should probably show you guys the full view. It's in this bottom right-hand corner here, the platinum sponsors. What's so important about that is, again, when we talk about what companies are redefining crypto here inside the United States under the Trump administration, it's these companies. It's Ondo, it's Ripple, it's Circle, it's Chainlink, it's Coinbase, it's Citibank. This is the evolution of the space, and it's so powerful that Brad Garlinghouse is speaking on stage at an event sponsored by a company like Amazon, sponsored by a company like Visa or Robinhood, and even Chainlink on this list. But let's continue to listen to what he has to say.
Talk with some of your folks on the Hill. Does it seem like things are truly at the standstill that they are, or is there still, do you still sense that there is bipartisan momentum to get this done?
I think there's some momentum. I think getting anything done in Washington these days is always a little tricky, but this is a topic which never should have been partisan, in my opinion. Like, it's almost like saying one side's pro email and other side's anti email, or, one's pro HTTP and anti. It's like, these are technologies. We shouldn't, I think about those in a partisan way. Almost as Brent McIntosh said the last panel, it's, how are these technologies used is way more important. And I think sometimes we lose the plot and people get too caught up in some of the politics of it. But look, I'm still hopeful when you see that kind of bipartisan support in the House. And certainly, again, you're seeing leadership from Senator Alsobrook, Senator Gallego on the Dem side, and you're certainly seeing tons of leadership on the right. I still think there's a chance that happens this year.
Mm-hmm. And kind of staying in the politics realm for just a minute here. Obviously, Ripple.
So just to make a point, Brad Garlinghouse just said he thinks the Clarity Act does get passed this year.
Is part of a large crypto group that has been playing a really key part in elections. I mean, I think last year it was $200 million spent in races across the country, currently has a war chest of, I think, $141 million the last time I saw. What is the strategy for the midterms? Fair shake.
Yes. So, Ripple has supported Fair Shake from the very beginning. And again, I would highlight the name. Like, the industry wants a fair shake. Like, this shouldn't be as polarizing. And I do think under the Gensler SEC, the industry was attacked. There wasn't any effort to provide clear rules of the road. And so what we have been asking for are those clear rules. I think Fair Shake, they should speak on their behalf. I'm not on the board or an operator within Fair Shake, but suffice it to say, they're continuing to execute the strategy that played out under the last election, which is we want to support pro-crypto candidates on the left and the right. I mean, ironically, despite this topic being somewhat right-leaning, the last election, Fair Shake supported more Dem candidates than it did our candidates. And I think that's actually a healthy thing, because again, this shouldn't have ever been, in my judgment, bipartisan. I think the Biden administration kind of made it partisan in a way that isn't good for the United States. If we want to be a leader in technologies that are redefining how infrastructure works around the globe, I agreed with Caitlin Long on the last panel. Like, this is very global. The US leaned into that in the late 90s with the internet. We've leaned out in blockchain. Like, it doesn't make sense to me. But I think this administration obviously shifted that. Things like Fair Shake are shifting that. And I think Fair Shake was incredibly impactful. And we have a very pro-crypto Congress. And we hope to see the Clarity Act get moved forward.
Absolutely. I guess I just do wonder, because it does seem like on Capitol Hill, obviously a lot of finger pointing, a number of folks are pointing the fingers at Democrats after this draft was leaked, saying this is a step too far. Are they really as pro-crypto as they seem? Does that mean that you're kind of maybe less inclined to support Dems, or does that mean even more support for Democratic candidates, especially those who have shown an interest in promoting crypto?
I'm not just saying this because I'm sitting in Washington on a stage in front of, I'm sure, reporters. I don't think about it as, are we supporting Dems or Republicans? I think about it as, we're supporting pro-crypto, pro-innovation candidates who want to see these technologies as they are around the globe. I mean, the United States is not leading in this. And there is an opportunity for the United States to lead. So I don't think about it as, should it lean more R or more D? I think about it as, keep leaning into pro-crypto candidates and educate both existing sitting congressional leaders and a next generation of congressional leaders. I mean, look, the reality is there is clearly a segmentation of age around all things crypto and blockchain. And there's no doubt in my mind that over an arc of time, the US will get this right. It's unfortunate that under the kind of Gensler regime, I think we slowed things down and it made it very difficult. We pushed things offshore where, ironically, it's less regulated and there's fewer consumer protections, which just makes no sense.
And of course, when it comes to sort of the meat of this law, what we're trying to get into is a large part of it is what is a security, what is a commodity. Of course, as you mentioned, you went through a $150 million lawsuit to get some of that clarity for Ripple. But I'm wondering, as you look at the market, I mean, are there things that should be a security? Like, how do you sort of define what Ripple's product is and why it's not a security versus other products? Is anything a security?
Well, so I think to some degree, the whole lawsuit for Ripple was about what is Ripple, which is a privately funded company that raised venture capital and issued stock associated with that. Those are securities. What is XRP, which is a technology, an open source technology that is kind of native to our products. We use XRP in our product stack, but there are scores of other companies building in and around the XRP ecosystem. People, will say things like, well, XRP has a CEO. And I'm like, who is it? Ripple has a CEO. That's me. There's scores, if not 100 other CEOs building around the XRP ecosystem. And I think that's when I hear people say that, I think, okay, they're not educated about what's going on. And so we need to educate people. Obviously, you see that in a number of other tokens where there's a very distributed, very open source community. People don't understand Ripple does not control XRP. It is open source. There have been amendments passed to the XRP open source technology that we opposed. We were against them and they still passed. That's okay. That's open source technology. There's other things we have championed that have passed, but it takes 80% of the community approving those amendments, which Ripple doesn't have control of that.
Mm-hmm. And so, I mean, if you were to define kind of what's a commodity versus a security, how would you do that?
Yeah, I'm going to do everything I can to dodge that question up here. I mean, look, there is language that has been proposed. I happen to think that there's parts of the Clarity Act and that passed the House that are quite constructive towards that clarity. I think some of the things that have been circulated, I'm like, okay, I don't actually get how that. Well, look, for Ripple, the one thing we will be adamant and absolute about is whatever is these draft comments that I see. It's like, well, we already won a court case by a federal judge. And if what you're writing gives the SEC an opportunity to bring another lawsuit against us, like, okay, wait, we can't support that. You can't take us back. And I think the industry needs what Ripple has already achieved. And what Ripple has done, and we've invested literally billions of dollars in the crypto industry broadly and tried to be a champion of the industry. We fought the SEC as a champion of the industry. And I think that we will continue to support it on a multi-chain basis. Those that I think approach it as there is somehow one token to rule them all, like that's not going to be the future of crypto and blockchain. In the same way, there wasn't one browser or one search engine or one auction website.
And that's so important, guys, because that's a message that we've shared on the show 1,000 times over, where we constantly say it's not going to be one coin to rule them all. It's not going to be that Elon Musk tweet where I think it was like Bitcoin and XRP at the top or whatever. At the end of the day, there's different use cases for different technologies. Like Chainlink isn't even trying to do the same thing that Ripple is doing. And Cardano is trying to do something completely different than what Ripple is doing. And HBAR has their own ecosystem, and Solana has the meme coins, and Bitcoin has the Ponzi scheme narrative. And of course, that's a little bit of a joke, guys. But I did want to give you a huge shout out. We are at 1,342 listeners on YouTube. We just passed 515 likes on the episode. If you're enjoying this content, you appreciate these morning live streams, show us some love. Smash that like button. It's a totally free way to help out the program. And I want to give a big shout out to Joseph in chat. We're going to be addressing every single question and donation at the end of the episode. But with that being said, let's complete this Brad Garlinghouse speech here.
I'm thinking
at DC FinTech Week today.
Back to when I got involved in technology in the late 90s.
I kind of feel like there's one auction website now, though. But that aside.
I don't follow that category.
So mergers and acquisitions. I wanted to ask, because Ripple has a number of examples of companies that they have acquired in the stablecoin realm, in the sort of infrastructure realm. What is sort of the plan here? What's the thought process? What's the end goal?
Partly because of the shift, I think people still underestimate the U.S. as the largest economy in the world went from very strong headwinds to pretty strong tailwinds. Now we're still figuring out as an industry, what do those tailwinds mean in the United States? And again, having the chief legal officer from Citibank, is an example of that shift. And I think he even talked about how it was very, very hard for them to engage this industry. this has been publicly reported, but I personally was debanked by Citibank during the last 4 years. And I think, happily we're past that stage, but I still think people underestimate the shift in those headwinds and tailwinds. And Ripple's thesis has been, okay, now is a time to really be aggressive about growth. And that is both organic growth and continuing to build. We're in the payments business, leveraging core technologies around blockchain and the XRP ledger around payments. We're in the custody business. We're in the stablecoin business. And then earlier this year, to your point around mergers and acquisitions, we spent $1.25 billion to buy Hidden Road, a prime broker, frankly, the largest non-bank prime broker out there. And we bought for $200 million, a stablecoin company called Rail, which was one of the leading stablecoin companies for the enterprise. So corporate treasury looking to use stablecoins to solve some of their internal movement of money. And that has been a great acquisition for us. So we're going to continue to play offense. I hope I have some more news on that very, very soon. And we think now is the time to invest, and that partly because of that macro shift in government policy for the United States.
Interesting. And when it comes to government policy right now, I know we touched on this a little bit the last panel, that there seem to be certain agencies that are kind of giving the green light, full speed ahead, but there are groups like the Fed that are maybe a little bit more tentative. And I'm wondering kind of what your experience has been so far. Do you think that things are going to change when we finally get open a few more openings on the Fed? What are your expectations? Where are we at now? What are your expectations for the next few years?
So I have two thoughts about that. One, and as much as I have enjoyed some of the panels here today, one of the things I would ask everyone to do, both reporters and otherwise, is to hold traditional finance accountable for, yes, I agree, the crypto industry should be held to the same standard around AML, KYC, OFAC compliance. Yes, yes, yes. And we should have the same access to infrastructure like a Fed master account. You can't say one and then combat the other. Like that's disingenuous, and it's hypocritical. And I think we all should call them out for being anti-competitive in that regard. So that's kind of one thought. There should be a level playing field. And to the extent we're seeing people act in different ways. Now, the other part I would say, as much as a lot of the Fed managed by this administration, the federal government, not the Fed, as much as that shift has changed, I think some banks are still nervous until those changes are codified into law. The Genius Act obviously helped, and that unlocks, I think, I had meetings yesterday in New York City where banks that would not have talked to us 3 years ago are now leaning in and saying, how can we partner around this?
Around stablecoin.
Around stablecoins, for sure. And again, the delta there is the Genius Act has codified into law. We haven't seen that happen. I mean, again, Ripple has had, we fought the fight and we have clarity that XRP is not a security, but the industry doesn't have that, which I think creates challenges for some of the more conservative banking infrastructure, even though they're like, yeah, okay, we're interested, but are they really leaning in because they're worried that in 3 years from now, there's another election, and is there a shift? I think that's a little bit too cautionary, because I think every day that goes by, even if without the Clarity Act in place, there's more and more firm policy positions that agencies are taking.
And so you think that even though there might be some sort of regulatory shift with the next administration, whoever they are, you're not going to go back to where we were at with Gary Gensler?
I definitely don't think that was, frankly, I think that was a dark day for technology in the United States. And they were not acting with good intent. And I could spend a whole half an hour session just on that. And I mean, look, you had a federal judge, this is a quote, a federal judge said about the Gensler SEC, they are not following a faithful allegiance to the law.
Wow.
Yeah, that's pretty damning for a federal judge who happened to be appointed by Obama, that they would come out and say that about a Biden SEC. I don't think we will go back to that. And frankly, I think the ship has sailed. I think that you can't put the genie back in the bottle in the United States. I don't think you really could, even though Biden may have tried with Gensler. But I think now that we are where we are, we are seeing many banks lean in. But for years, the U.S. was a frozen market.
Right.
I mean, one quick data point is 80% of Ripple's hiring between 2001 and 2004 was non-US, because that's where our customers were. Our customers around the world were leaning in. The customers in the US were, like, we gotta be careful.
Mm-hmm. And speaking of banks, I mean, Ripple has applied for a national bank charter.
Yes.
Can you just sort of give a brief overview, any updates in that process? How are things going there?
I don't know the exact answer. I mean, look, I think it depends who you talk to. It's been a little disappointing to see some of the traditional banks start to lobby against things like that. It's like, look, if we want more stability, we want clear regulation, having a Fed master account actually is a net plus to that. You want to de-risk stablecoins, having Circle have a Fed master account, have Ripple have a Fed master account, that's actually a good thing. And held to the same regulatory standards as a bank. Great, we're in. We feel like we're already doing that. Ripple launched our stablecoin under a New York Trust license, which we feel like is the gold standard above what even others have done, because we are all about serving institutional money movement. And institutions aren't going to work with us unless we have really leaned into being compliance first.
Mm-hmm. And I know there have been some concerns raised from community banks who say, look, if you give, Ripple and others a bank charter or master account, we're concerned that you're already going to see funding. Trillions, I think, are projected to go from some of these smaller banks into crypto. There's a concern about a lack of capital. How do you respond to that?
There's nothing that stops community banks from leaning into these new technologies also. This is kind of the classic, people are afraid of innovation and the innovator's dilemma. And we shouldn't penalize customers, consumers, based upon, it may be a particular community bank's unwillingness to lean into new technologies. That doesn't make sense to me. Like we should want community banks. If anything, it should be, how do we provide clarity such that community banks can be served and leverage these technologies and compete with Citibank? That's a good thing. Right now, the community bank has to pay Citibank. I shouldn't pick on Citi. I like Brent a lot, actually, but let's say HSBC. They're not represented here. But the big correspondent banks are making money from the community banks by actually being their correspondent bank to settle cross-border transactions.
Mm-hmm. I'm wondering too, kind of dipping back into market structure here for a second. I mean, if the Senate doesn't get stuff on market structure, you've said that you've already seen this increased interest in things like stablecoin in the markets. I mean, does that kind of put a freeze on things if there's no regulatory clarity coming from Congress this year and no certainty? Is that going to make it that much harder for a lot of the digital asset space to gain traction with companies, gain traction with banks?
So I think you asked the question in kind of a black versus white, and I think about it as gray. It depends upon the bank. It depends upon what people like Paul Atkins say publicly and put out as position papers on behalf of the SEC or CFTC. And I think it's kind of to be determined. But the more time that goes by, the better I think it is for the industry, period. Again, Ripple happens to be in a unique position, and that we fought a multi-year battle to get that clarity for XRP. And so that the number of people building in and around the XRP ecosystem grew quickly after that resolution was final, because oh, okay, this is now clear. I think the whole industry needs that. The whole industry needs to be able to lean in and build, whether you're building payment solutions, custody solutions, land title registry solutions, tokenizing commercial real estate. Like this tsunami is still coming, and I don't think there's anything that the U.S. federal government is going to do to stop that. Leaning in to provide clarity so that consumers are protected, companies know how to operate. The vast majority of entrepreneurs I know in crypto want to play by the rules. They're asking to understand what the rules are.
Sure. But is there, because I hear this on the Hill a lot too, that if they don't provide more of this framework, if they don't provide more, whoever named the clarity bill was really smart, because it just keeps coming up naturally. Whoever provides more clarity, then crypto will go overseas, kind of as you mentioned, that the US will miss the boat, and that, even if we're still having things like, Paul Atkins coming up.
Guys, quick comment here is that we did a long form video yesterday, Johnny and myself, talking about how it makes sense for the government to reduce capital gains tax on cryptocurrencies. And I think that's probably the second tier of what Brad Garlinghouse is discussing. He's talking about how the Clarity Act is important because it's going to provide rules and regulations If we create tax incentives for capital outside of America to start buying and investing these American-made products, that is going to open the floodgates in a way that we've been predicting. The projects like Solana, Cardano, Stellar, HBAR, and of course XRP that are built here inside the United States. Chainlink is another American-made project. Those are the projects that I believe are going to be the most successful after the Clarity Act and after the tax reduction that I'm anticipating. But it's not just me, guys. Eric Trump has said on several occasions, several public platforms, his father is committed to making America the crypto capital of the world, and reducing capital gains tax is a part of that equation. But let's listen to the last 60 seconds, and then we'll address many of the comments.
With stuff, or the SEC regulating on things, or coming out with more clarity, that will not be enough.
Well, the one thing I want to say, your comment is that already has happened, right? Lots of entrepreneurs have decided, I'm not going to incorporate the United States because there's not clear rules. I mean, people can debate about MiCA, which is the Europe's kind of Clarity Act version, and it provides guidance. The FSA in the UK, like, there are clearer rules coming out of other jurisdictions. And so, yeah, if I was an entrepreneur starting today, I absolutely would look to that. Even the fact that you saw FTX as a non-US entity, like, bad things happened. Let's lean into having clarity for the United States. Let's not do what Gensler was doing of regulation through enforcement and bringing lawsuits and lawsuits and lawsuits. Like, why we wouldn't want this industry to have the benefit, meaning the regulatory clarity, the regulatory oversight, and the benefit of having a Fed master account, that's a good thing. Like, I don't know why we would fight that.
I think that might be a great spot to leave it at. I see we're at time. So Brad Garlinghouse from Ripple, thank you so much for taking the time today. This is great.
Phenomenal interview there with Brad Garlinghouse. And again, this is really exciting because it's the first time we've seen Brad talk about these topics publicly on a stage in front of an audience. It's really great. Now, my biggest takeaway, once again, when you listen to a guy like Brad Garlinghouse, he is so certain that America is going to continue to be the most pro-crypto country on planet Earth. If Brad Garlinghouse believes that after the 4 years that he just went through against the SEC, we should all embody that opinion and understand that when the ETFs are passed, when the Clarity Act is in the market, when we get a tax reduction, maybe in capital gains tax on digital assets, those are the catalysts that are actually going to bring new money in. Up until those moments and those catalysts occur, it really is a speculative market, just like our man Johnny Krypto constantly talks about. It's not 2001. It's not 2004. It's not even 1999. It is 1996, and we are waiting on the passing of the Telecom Act, which is very similar to the Clarity Act. It provided rules and guidelines for how to use this technology. But someone said, how does Abs keep up with the content and chat? Now, it's funny because I got the chat on the right side of the screen. I got the content in front of me. How long have I been doing this show? 4 years. I've been doing a daily live stream. So for anybody who's just finding Good Evening Crypto, we go live every single day, 11 a.m. We also give a 5:30 p.m. Eastern time update, kind of diving into many of the topics that we discussed today. Now, the question that we asked you guys during this episode, will the United States pass a zero capital gains tax on American-made cryptocurrencies? 69% said yes. 31% said no. That's out of 1,000 votes on today's user poll. So once again, guys, it's so obvious. They're going to create incentives for people to start buying these digital assets, and reducing taxes is just a logical part of that equation. Now, Johnny Krypto, first of all, massive shout out to our friend for joining us. We just broke down the Brad Garlinghouse speech from DC FinTech Week, and I'm going to break down some of the topics, but I think it'd be fitting that while we have Johnny Krypto, guys, we address some of the comments in the live chat. And that, like I always say, we're going to end every episode by addressing the donations, the comments, the concerns, and of course, the questions out there. So massive thank you to anybody who donated today. Miss Daisy said, the show was my favorite part of the morning. This show was my favorite part of the morning. The same message twice. Big shout out to you, Miss Daisy, and a massive thank you. I'm grateful that we can be a part of everybody's morning out there. So thank you so much for tuning in, guys. For Love says, so glad we get to sit in GMC and GEC twice a day. We need it. Love you guys. So shout out to Johnny Krypto. For Love, they love you, my friend. Shout out to Johnny as well. We got mutual love.
I love him back. I love him.
There you go. Guys, Julie Taft said, thanks for keeping this time for us. I love this show and this chat. I told you guys, I felt an obligation to keep this time going. A lot of people messaged me over the weekend saying, you know, this is a part of their daily routine, and I wanted to show respect in that aspect. So it was very conscientious. Thank you to anybody who sent me a polite DM. It was very respectful, and those positive encouragements are why I came live. I said, listen, if 25 people are willing to DM me. There's hundreds of people out there who would like to DM and just didn't. So I took that very seriously, and I want to give a big thank you, guys. Now, again, just a quick reminder, we do have 4,600 live listeners. If you're enjoying this content, smash that like button. But Johnny, what we're doing right now, we're just addressing all the donations for today. And Joseph came with a bunch of $5 donations. So we're going to have to go, I'm not going to go rapid fire, but we're just going to make sure we address every single one of these before the end of the show. So Joseph stated, for fib levels to determine the local top, you use 6-month highs and lows, or do you use a 1-year or all-time highs and lows? Now, when you're talking about those $20 price predictions, because this is about a topic that I discussed prior in the episode, Johnny. So I'll just answer this one. What you're typically doing, like when we're looking at a $12 XRP or a $15 XRP, those are the all-time highs and the all-time lows. When we look at some of the Fibonacci levels for this cycle, like when you do the 1-year high versus the 1-year low, guys, that $5 450 number is what comes up time and time again. It's not $12. It's not $40. It's about 450 to 550. So that hopefully that answers your question. If you're talking long-term, $12, $15, that's what the fibs will give you. If you're talking short-term, you're talking about $4.50 to $5. That's just what the data tells us objectively. Joseph with another $4.99. Thank you very much, my friend. What is the cheapest DeFi exchange to buy XRP? The cheapest on-ramp from US dollars to XRP considering total fees. Now, let me just give you so first of all, I'm not a financial advisor. I'll tell you what I have done. That's what I'll tell you right now. For the cheapest US dollar to XRP DeFi, you can go to Uphold. You can buy the RLUSD stablecoin with 0 fees. You can swap the RLUSD into XRP on the XRP ledger, the native DEX, and that's going to cost you basically nothing. You're going to end up paying like a fraction of a penny. So that's what I've done in the past, and hopefully that's the answer that you were looking for, my friend. Another $4.99 from Joseph. He said, for ETFs coming possible, they already got liquidity during the flash crash or privately on exchanges through CTOs. Thus, we won't see the effect of the $5 to $10 billion incoming. I disagree with this, Johnny. I'd love to give you a chance to kind of answer this, and then we'll make sure you get statements here as well.
You know, I mean, at the end of the day, there's kind of a couple different things happening here. First of all, we don't know that they bought it all up at that price. We don't know who bought at that price. It could have been other institutions, not XRP. We don't know. So that's just a big assumption you're making, Joseph. At the end of the day, I think as you were talking about, one of the things we see that's pretty reliable has been, the past 1 year fibs. They kind of do tell you. And as I've said, rightfully, $4, $5, $6, $7 seems, in that zone of a 4.263 extension. To me, that's kind of where, don't worry about this stuff, guys. Don't worry about what's coming, this and that. Listen, here's the thing. We know we're in an asset class that's brand new to the world. Look at the factors. You're in an asset class that's coming. You have a pro-crypto administration that's going to make crypto capital, American crypto capital of the world. You're looking at companies that want cheaper, better solutions. You have the Clarity Act that's going to redefine how all this stuff gets invested in. All those big catalysts are coming to me. So I don't really focus so much on this comment. Well, the 5 to 10 billion is coming. It's already here. Nah, I don't think like that at all. I look at it as we are in something early. We know there's multiple factors that are going to drive it up. And I'm not sitting here trying to calculate exactly nobody can do that. We have no clue. We don't know who's buying it. So I don't get hung up on that. I look at, am I in a good investment? Did something change on a Friday fundamentally that I didn't know of, right? The fundamentals changed on this whole industry in the day or whatever that was driving on. And the answer is no. I mean, that isn't the case. And we're looking at an asset class that we know is transforming right now as we speak. And so that's how I look at it. And for me, that's why I'm completely bullish in this sector. So I hope that answers your question, my friend.
I also agree, guys, that remember this, throughout the last month or so, we took a lot of time to kind of track those outflows that were happening on Coinbase, where Coinbase went from 970 million units of XRP at the early summer down to basically 0 in their cold wallets. A lot of those went OTC. That means over the counter. And for somebody to understand this, if you're newer to the market, you don't know what OTC is, there's nothing in the market preventing Johnny Krypto and me from transferring XRP at any rate we'd like. I can say, hey, Johnny, I'll sell you, Johnny, you're a sucker. I'll sell you $10 XRP right now. It's going to be 20 in a year. Why not buy it from me for $10? And Johnny goes, you know what? I'll take that deal. Well, then I could send 1 XRP to Johnny and he could send me $10 in a stable coin. That's essentially a really simple way to conceptualize an over-the-counter transaction. Correct. None of that took place on exchanges. None of that affected the order books on Coinbase or Uphold or anything like that. but XRP was still moving behind the scenes. So I think if they were going to be buying XRP and they were going to be buying these lows, which I think they are, to answer his question, it will not prevent the price run from the $5 to $10 billion that will come in. Because again, they don't know how much demand they're dealing with. Companies like Grayscale aren't just sitting on $1 billion worth of XRP liquidity. It's not taking place. But getting into the next one, thank you, Joseph Ray. Another $4.99. Any devil's advocate argument for low liquidity and market multiplier that's put forth by Jake and others, do you believe in it? Question mark. It seems factual. I don't want to play the devil's advocate for this one because I believe in it. I really do believe that the order books are thin. It works in both directions. We saw it over the weekend. So it's not just a positive thing. It also works in the opposite direction. It's one of the reasons that a lot of these altcoins crash 80, 90% on a liquidity wick with no news related to the individual project. It's just a liquidity game. So I would say I believe in it. I don't want to play the devil's advocate. Joseph, another thank you, $4.99, my friend. Big thank you for all these $5 donations. Ideas for benefiting from real world asset tokenized besides XRP? What other coins? HBAR and Ondo. Both of those working on tokenized assets with some of the biggest companies on the planet. Big thank you to Allie. Shout out to a very important community member. She said, everyone gets a hug. Hugs all around here on GEC, guys. And we just passed the 1 hour mark. So we're going to begin wrapping it up for today. Johnny, don't worry. We're going to record our video right after this. So you stick around, my friend. But everybody else, we're going to be back for our 5:30 p.m. update. We got nearly 5,000 live listeners. If you're enjoying this content, show us some love. Smash that like button. And again, we're going to be here every day talking about what's happening in the market. But Johnny, here's my honest opinion. People are overly pessimistic. I started off the episode we did about the taxes yesterday saying that there's so much unwarranted pessimism. We're looking at a huge collapse. Bitcoin's still 110. Ethereum's still $4,000. XRP's still 240. If we were sitting in an environment where Bitcoin was 70K and XRP was $1.20, yeah, I'd probably buy into the fact that maybe things are different. But that's not what's happening. So for me personally, I'm optimistic. I'm excited. Want to give a huge thank you to Johnny Krypto for jumping in at the end of the stream. Johnny, any closing remarks for today?
You know, Abs, one of the things I've always seen you hear all the time is when the retailer is pessimistic, that is usually when the market is ready to take off. So, guys, there's some actually bullishness in that, in the fact that folks are feeling that way. So, you know, and here's the thing, you know, we get asked all the time on this show, you know, what are things you can do different? What are things you can do to save money and things like that, right? So I just want to let people know what we do. What we do here, folks, is we have two tools that we absolutely love. You all know Merlin. It's the smartest way to track your crypto. We use that to track all our crypto in one place, set our alerts. That's the most important part. Mentally, want to be prepared to take profits out. When you take those profits, now the question, where are you taking them? And that's where we use I use ITrust Capital, right? We have a Roth IRA. And what's beautiful about using ITrust Capital is Abs, any profits I take from there, as long as I hold them for 5 years after 59 and a half years old, you get tax-free gains. You don't pay any taxes on that money. So for me, guys, if you're looking for tax advantage strategies or ways to either minimize taxes, you can do a regular traditional IRA. Or if you're like me and you don't want to ever pay taxes again after 59 and a half, and we're all going to get there at some point, you can open a Roth IRA and do that as well. So click on the links below. You can sign up for a free 30-day trial from Merlin. Then you can go set up your account with iTrust Capital. Use promo code GEC9, and they'll give you $100 to get your account started, as well as any other money you want to donate to it. So that's what we're doing. We're trying to put you guys in the best position to win, and we're trying to put ourselves in the best position to win, and we're sharing it with you guys what we're doing. So from that perspective, that's how everybody can get ready. But I am super bullish after Friday when we just saw a massive leverage wipeout. To me, the sky, we're only headed one way now, my friend. Now I think we're going to go sideways for one, then we're heading up. But we've just given you the recipe of how to put yourself in the best position. So when we start moving up in the next, this quarter, you now know how we do it. Do it like the pros.
Johnny, you know what's cool? I always say it's not about just how much money you make. It's how much money you keep during each individual bull market. And there's a couple of ways to do that. You take a little bit of profit at the top, you put it to the sidelines to reinvest, but you also give yourself vehicles so you can trade and reduce your taxes. And we did a whole video about this yesterday, guys. Whether you're setting up an LLC, whether you're using a Roth IRA, if you have an IRA, do you want crypto exposure in it? Because if you do, you should be using ITrust. And we're giving you guys an advantage here. using the GEC9 promo code, you're going to get $100 free, and it's not going to work against your principal. You can put it $7,000, I believe, is the limit here. That $100 donation, not going to come on the principal. So it's now $7,100. But the most important thing is what Johnny said. It's about structuring your portfolio so you keep the maximum amount of profit. And if you already have an IRA, why not add crypto into your IRA so you can maximize some of those opportunities? You listen to a guy like DAI, you listen to a guy like Digital Perspectives. Both of them are taking advantage of this exact same company, using the IRA to compound that wealth and eventually pay their taxes when they cash out at the end, but you're able to compound tax-free for the time being. So again, using promo code GEC9, click on the ITrust link below and just check it out, guys. You're doing us a favor as well. This is our first sponsor. We never had a sponsor. We chose a company that we personally use, that we understand, and that we know gives our listeners an advantage, guys. So just wanted to give a huge thank you and shout out. Big thank you to ITrust as well. The guys super cool over there. They got a great team going on. They've been very supportive of the GEC show. So again, they're investing in our community the same way that you guys are. And that's what I'm excited about here. But if you enjoyed today's content, smash that like button, guys. We're going to be back for a 5:30 p.m. update. But for now, we'll see you all in the next one.